Hello and welcome to our market alert video for today, which is Friday, May 20, 2022. And we're entitling this video Dow 25,000. And you may be asking yourself, well, how on earth could that possibly happen? So I'm going to go over that with you here in just a moment. But before I do, I just want to tell you that I am in New York. I'm actually at my daughter's graduation. What's interesting is she actually graduated in 2020, but because of the pandemic, the live graduation ceremony is in 2022. And so they're celebrating because the other one was virtual, not the same. So if you're noticing any weird stuff happening, it's because, yes, it's a virtual background. I admit it. Technology is kind of cool, but not perfect. So let's go over what's going on in the world right now and what we think is going to happen. And we're believing more and more that the possibility of the Dow going down to 25,000 could be a reality. So I want to go over with you our rationale behind that and why we think there have been few times in the past when it has been more important to look at protecting what you've got and making sure that you're not taking more risk than is appropriate for you. So the first thing is that the Federal Reserve has a dual mandate. The one of their mandates is to control inflation, and the second is to grow the economy. Well, given a choice of which one of the two is the worst enemy, inflation is a cancer. The economy going into a recession is the flu. So which one do you want? Neither one, but if you had to pick, you don't want cancer. So the old expression about don't fight the Fed means that when the Fed is determined to do something, they usually win. And right now, what they want to do is they want to slow the economy down. They essentially want to take all the money out of the system, that there's so much excess money that is chasing after fewer supplies of goods and services, which is causing all this inflation, which, by the way, they're the ones that did this. They put too much money in because of the pandemic. So now they got to take it out. And what are we seeing? Well, the consumer represents 70% of the economy, and they could be in for a really hard time. Walmart came out and said that, and Target came out and said that they're seeing higher food prices, higher product prices. They're guiding lower in terms of their profits because the consumer is not going to be able to afford as much. The consumer, which represents 70% of our economy, is faced with rising gas prices, rising food prices, rising cost of heating and cooling their home. They don't have a lot of discretionary income, and that could really put a dampener on consumption and therefore the profits of companies and therefore the stock market that the profits come from. The other thing also is that I want to show you a chart here, so bear with me just a moment. I want to share my screen with you. Give me a second to do that. So one of the things that this is the Dow Jones so far this year, as I record this. And one of the things that happens when you go into a bear market is what I call playing a yo-yo while you're riding on a down escalator. So the escalator is corporate profits, it's the economy. And so if the economy and profits are going down into a recession, then you have a down escalator. And you're playing a yo-yo while you're riding on the escalator, and the yo-yo is the stock market. And if you look at this chart, what do you see here? It's a downward escalator, and you can see the yo-yo. And the interesting thing also, which is not a good sign, is that each new low is lower than the previous one. And that is a very, very bad sign. So we're right now very glad that we are looking at our protection mode in terms of our strategy and for our clients. Now, I want to show you this one right here. So this chart right here is why do we think that it's possible that we could see Dow 25,000? Well, this is a 2-year chart, and it goes back to when the Fed right here on the far left down here started this massive infusion, as well as the federal government. They borrowed and they pumped the economy. The Fed threw trillions in, and we had this huge surge, as you can see here in the stock market. This is the Dow. And now they're going to take all that money out to get us back to basically the amount of money in the system before they pumped all that in. Well, guess where the Dow was before they did? 25,000. So that could be another 25% drop from here, folks. So what you've experienced already, if you are still invested, it's half of what it could be. And what should you do about it? Well, our view is you should protect yourself. Now, we can't help you with that unless you visit with us. So what I would recommend is you go to our website, it's rpoa.com. And when you're there, click on Meet with an Advisor. We'll sit down with you. We'll go over how our strategy works, and we'll tell you what we're looking at, and we'll tell you what we think you should do. But this is a time to protect your retirement. You don't want to see what you've already experienced happen again. And then it takes several years for it to get back, like 2008, which took till 2013 to get back. You don't want all of that. So let us help you. Go to our website. It's rpoa.com. And we'll look forward to visiting with you and seeing if we can have a good partnership. So thank you for watching this video, and we'll talk soon.